All right, we're going to keep talking some tech here and zoom into a sector in the comm services and streaming world with Alicia Reese, Vice President of Equity Research at Wedbush Securities. Alicia, thanks for being here on the Schwab Network this afternoon.
Thanks for having me, Oliver.
We've got a pretty busy agenda later on today with earnings. One of them is a company you cover, Roku. Tell us what you're expecting in the report tonight.
Yeah, so I think, Roku typically beats their guidance. So I think there's high expectations for that. Over the last quarter, I think there's been an uptick in new front bookings, and Roku is likely benefiting from both market growth and market share gains, ongoing market share gains, given its large share of the, smart TV sales, and also, as a expanding ad platform, and potential e-commerce or likely e-commerce beneficiary. And also, I think there's a lot to be said for the scatter market starting to inflect now in the first quarter. I think that'll give them a lot more impetus to get very clear on their 2024 EBITDA guidance. They had guided to positive EBITDA in 2024, and that was seen very favorably, but I think they can get more specific, and their guidance could beat expectations here, pushing the shares higher.
So they're taking share away from the hardware market. Is that still where they are trying to find a place, or is this
advertising?
Advertising, okay.
Advertising, yeah.
So that's kind of their golden goose at this point.
Yep, absolutely. Absolutely. Okay. And I think you see with the, Walmart attempt by Vizio right now, I think that really lends a lot of credence to where we are in the advertising market. Advertisers are wanting more and more to follow viewers to connected TV from linear, and their capability now, this is kind of the wild, wild west of e-commerce becoming a capability on connected TV, and Roku being at the forefront of that, that gives advertisers a lot more capabilities than they ever had with linear TV.
Okay. All right, so Roku this afternoon, how do they impress? I mean, they seem like they've been the most sluggish to actually turn a profit in the category of high growth. So do they need to show big top-line growth, or can they start getting closer to profits?
So during the pandemic, they were able to pull back on spending, and you saw the magnificent leverage that they have in their model if they're not spending too much. Since, post-pandemic, they started spending again and really expanding their international business, which is costly. So, with the market really favoring profitability, they've pulled back on that. They cut their expenses, and they're really, rearing towards, profitability. That was their guidance for 24 profitability. On an EBITDA basis in 24, they were profitable in the third quarter. They should be in the fourth quarter as well. They could potentially, I'm not calling for it, but they could potentially even get, positive EBITDA for the year in 2023, 1 year earlier than guidance. That would certainly shoot shares higher. But if they're just on track to get to that positive EBITDA in 2024 and get there, throughout the year, they're certainly going to impress.
Okay, so it seems like there's hope then for some of that bottom line improvement, real hope. Absolutely. But in the short term, they're kind of relying on valuation expansion still for the stock price. You got a $120 price target. What kind of PE do you have in that calculation?
Yeah, that's a pretty high PE, like in the 30s, 40s, depending on which year you're applying it to, 25 or 26. But, just in a discounted model looking forward, what we don't have in the model now, which they really have a lot of potential for, is twofold. One is the international growth. They're primarily still in the US, and they have a lot of international growth capability, particularly as they just created their own branded TV that they can distribute globally. On the other side is the e-commerce opportunity that's not yet hit their financials, and which is just starting and going to be quite a big market. I think Roku at the forefront of that, Walmart potentially with Vizio, competing with Google's Chromecast and Amazon's Fire TV, of course. So I think with those, it's pretty easy to get to those high valuations.
All right. Hey, in the streaming world, as it pertains to original content, Netflix, obviously the big winner right now. We're so close to getting back to records. Give me a quick thought here. If and when does that happen?
Yeah, I think they have a lot of different things working for them. They have the password sharing crackdown, so that's adding new users, higher ARPU with the family accounts. They have the ad tier that's not even yet nearing accretion. The ad tier gives, users a lower price option for staying on the service. Those, 23 million MAUs, that's going to grow, and that viewership is going to grow on that platform as long as Netflix really continues to improve the content. And they are doing, loads of things with their content. I think they have the most efficient content spend of all the streamers right now. They're buying international content, showing it globally across their markets, and they have the largest markets of all the streamers. And so they're not spending as much for that return. You have them adding, low-cost sports-like content that has a lot of, drama attached to it, like the WWE, and they're adding more games that are free to play for their users. Getting some games like GTA in there can really help go, looking forward. So I think, if they continue to build on that strategy, they're already winning the game. They'll continue to.
All right. Seems like it's only a matter of time. Thanks for the analysis and a great preview here for Roku for us this afternoon. Appreciate it, Alicia.
My pleasure.
Thank you very much.